Hello and welcome back. You're listening to Family Planet365. I'm your host, Malena Jackson, and today we are talking taxes. Yes, tax season is upon us, and we don't have to stress, right? Because we listen to Family Planet365. Today we're talking to Bianca Bonilla. Is it Bonilla?
Bonilla.
Oh my goodness, Bonilla.
You pronounce it right in English.
Bianca Bonilla from Tax Smart Solutions about being, well, tax smart. Before we left for break, Bianca was sharing with us about C-Tech. It was a place we can go online if you're, juggling whether you should go to the lady or the guy or the man who does taxes at his home versus going into one of those storefronts. She said the best thing to do is to go to C-Tech. Tell us about that again.
C-Tech is a California Tax Education Council, and you can verify your tax preparer right there. So the first name, last name, and it'll tell you exactly if their credentials are valid for the year. So that's the first thing you want to do. Verify that your tax preparer is licensed in the state of California, so that they know the California tax laws.
And they're compliant.
And they're compliant with the federal and state. Yeah.
Okay, and so it's the letter C-T-E-C.
Yes.
C-Tech. I thought it was
.org.
.org. C-Tech.org. Thank you, Bianca. Okay, so we were talking about, you said we should really stay organized as much as possible. And I like that you gave us the peak times of tax season so that, like, I'm the type of person, I try to gauge when to go to the post office because it's just something I do not enjoy doing. But I've learned, like, if you go right after lunch, like usually around 1:30, 1:45, you don't stand in line. So I've learned that, and it's worked out really well for me. So I'm glad to know about the peak season for tax season. Tell us again what that is, Bianca.
Correct. So tax season, the first peak season would start with, as soon as you get your W-2s, people are getting ready to file their taxes. And it probably will say from January 19th, IRS opens until probably 3-4 weeks after that. Okay. So you have a whole month, February 15 per se.
Okay.
And then you have it's just before Valentine's Day, a lot of people want to still get the money, the refund to buy, the wife, the girlfriend, the
get
gift, engaged, need the ring. So, and then after that, probably the second peak will be, so the best time to file if you don't want to wait in line or make an appointment, probably February 20th to March. The 1st of March. You have 2 more weeks where there's, it slows down and the tax pros are not as busy as the first peak and the second peak. So the second peak will be the last week of March through April 15th. Okay. And that's, the other peak where, we get the more complicated returns and people that owe usually leave it for.
And I like what you said before break. Some people think, I owe money, so I'm not going to file right now because I'm not trying to write an $8,000 check. I don't know, $8,000 just in my head today. But you said, you know what, don't let that deter you from filing on time. I would say, I won't even say early. I'll just say from filing on time, because you can go ahead and file in March, and then you don't have to write the check until April or till the deadline when you send it in, right?
Correct.
And you said that gives the accountant time to do what? To get familiar or be sure about how much you owe?
To get your returns done on time. If you wait until February 15th that morning to come do your taxes, then you have until midnight to
April.
To either
so April.
I'm sorry.
Okay.
April 15th to either get an extension if you're not ready, if you're not prepared, if you don't have all the documents. There's some documents missing that we can file your return with a missing document. So we will have to file an extension, and you don't want to delay the process of doing your taxes on time, because then more penalties, filing late penalties, interest, and we want to advise you and help you as much as we can. Also, if there is an IRA contribution that you need to make before April 15th to lower your tax liability, then you need to do that before that. So if you come last day, you're not gonna have.
There's
time
no wiggle
to do
room. There's no. And one of the incentives, I love how on tax date, the deadline, they have a lot of free things going on in town.
Correct.
So, here's our incentive. If we just file our taxes on time, then instead of running around trying to figure out, if we're going to file an extension or if we're going to stand in the line or be at the post office, we file early, and then we could take advantage of all the giveaways and a lot of the restaurants have you get 20% off.
Correct.
And I love that. It makes it kind of fun and it kind of takes the pressure off. But for the last 2 years I've been able to enjoy that time, but before that just never was. My head was like someplace else and just trying to figure out if I'm going to do an extension or how, what's going to work out. I owe this much, and it was craziness.
Let me just say something about extensions. The extension is to file the paperwork. It's not an extension to like not pay.
Do nothing. Oh, to what?
Yes, it's an extension to file the paperwork. So you have to do an estimate of how much you might owe.
Okay.
And then you file an extension, the paper. But you still have to, the payment is due April 15th. So if regardless.
I want to say irregardless. That's not right? If people say irregardless, like, okay. Anyway, so regardless.
Right.
It's due.
It's due on April 15th. So if you decide to pay after that, you're already paying interest on that money that you owe the federal.
Okay.
So file the extension if you need time to file your paperwork, but not the balance due. It's not an extension to pay what you owe.
Okay, I get that. All right. Well, Bianca, what would you say since we're talking to families, let's talk about how to save money when we're having kids, like how to I know we get the deduction for each dependent, right?
Correct.
But what are some of the deductions that a lot of families overlook that you think we should really pay more attention to when it comes to tax time?
Childcare is one of them. And talking about the nanny factor, I really encourage my taxpayers that when they're going to hire a service that you're going to get a receipt, you're going to get to deduct that on your taxes, because if you pay cash, you might spend a lot of money. And I know how much. Well, I don't have kids, but it
could be expensive.
You spend a lot of money on childcare, on a babysitter. So you want to make sure that it is a tax deduction that you can take at the end of the year if you have the right paperwork. If you have, if you took your kids to childcare, that it's a business, they will give you a statement at the end of the year. You bring that to your tax preparation and you get to write it off.
And so let's talk about that, because when you go to daycare, that's different, because they most good daycares offer that, or preschools. They'll give you your tax, your year-end tax, what is it, like receipt or statement?
Yeah, correct.
So they're good with that. But what about like families? I know, because we get these a lot. Like they have a babysitter that will take care of their kids. They're only paying them like $12 an hour. Because we get that a lot. Like, well, I have a sitter now who I only pay $12 an hour. Why would I pay a nanny $18? And, we go into the whole spiel about like the benefits and the features. But if you have like, say, I don't know, the lady from church who comes in and keeps your kids, and she only charges you $10 an hour. You pay her every week. And she's not going to give you her social, because I've tried it. When we lived in the Valley, I had this wonderful lady who would come in and help me. And I asked her, I was like, I want to be able to write this off. So can I get I want her to fill out an application and give me her social. And she was like, I can't do that. So I knew it was time for her to go then. But
right.
How can you file if they don't feel comfortable giving you their, maybe she didn't even have a social security number, now that I think about it.
They can have an IT number. It was a taxpayer ID number. If you don't have a social security number, you can apply for one.
Okay, so that's what you were requesting.
Correct.
So if you have, like, say, a sitter who's coming in and you're paying them cash, you say, because a lot of them like cash.
Correct.
To get that tax benefit, request that they get a taxpayer ID number.
Correct. Well, they can apply for one. If they don't have a social security number, they can apply for a taxpayer ID number, and they use that to report taxes, to pay taxes like any other American citizen. We all pay taxes. So they get that number, so they so that they can file their taxes, and you will get that number so that you get to write it off. And the child care is a deduction. You get to deduct up to $3,000 per kid, up to two. So that's $6,000. If you know you're paying more than $6,000 in child care, then you might consider using a service, that's going to give you a receipt. And if you can get that information from your babysitter, the state requires you having that information, the address, where the childcare, who's the service provider, and it's, if you ask for the deduction without having the taxpayer ID number or information from whoever's giving you providing the childcare, you might not qualify for that credit. So it's important that you get that information.
But then how would you treat that if the child care provider doesn't want you to report the taxes? I mean, you obviously can't get the deduction because a lot of them, like, they want to get the cash and they don't want taxes taken out. Can you, I know you're like smirking, but this is real life stuff. This is real world. Like, okay, so they don't want you to take taxes out.
But I think
can you still report that you paid, say, the babysitter $12,000 this year?
Well, you can only take up to $6,000. So
so don't see. Or even if you pay
$12,000, the max
just say
is $6,000. It's
just
$3,000 per kid up to 2, so $6,000. You max it out and you ask for that. And then as far as other people don't having the tax ID number, my suggestion is apply for one, get in the system, report your income, and
okay, yeah,
it will be a benefit for everybody, even for them. So if the best advice, if you want to take that deduction, is hire a service that will provide you with the statement, with what you need to get those services.
That makes sense. Or if you don't care, then just don't.
Correct. Don't. Because a lot of other taxpayers, they pay the mom, they help.
Yeah, that's right.
And that's another thing too. The government knows, or the federal, they know, like, you might say you actually pay $12,000 or $6,000 to get the deduction, but you actually, maybe your mom or your family member took care of the kid and you're claiming the credit, but you actually never paid that money. So there is like the fine line there. You got to be careful with those currencies.
Okay. Yeah. But does it really make a difference, Bianca? Okay, we talk about, as a family, what are some of the tax deductions that we should really take advantage of? And you mentioned childcare. If you're getting up to $6,000 deduction, will that really...
Well, it's a credit. So it's not like you take it off your income.
That's what I'm thinking in my head. Like, they just take it off. But it's a credit. So what does that mean?
Well, let's say if you claim $6,000 based on your income, all the calculations we do, and then you get a credit of $300, $400 on your tax liability. So that comes off your tax liability. That means $400 in your pocket.
Oh, yeah. I see. Okay,
yeah.
That makes a difference.
These credits reduce your liability, your tax liability. So the less liability you have, the more refund to you have. And there are some credits that are refundable credits, like the child care. Like the child credit. When you have a kid, there's a credit.
Okay.
It's $1,000. So it first starts being as a deduction of your liability, and if there's any leftover, it becomes a refundable credit to you.
When you have the baby.
When you have a baby.
You know, I remember a couple who she was originally from...
It's not just a baby. It's as long as they're 13 years old.
Oh, wait. Okay, so that went over my head. I was thinking about childbirth. No?
No.
Okay.
Childbirth. Like what?
Oh, I thought we get a credit for having the babies.
No. It's per kid. Per kid, you have under a certain age, you get $1,000 credit.
Okay, because I had a friend I know of a couple who she's originally from Switzerland, I want to say, and she lives here, but she went over there to have the baby because you get so many incentives when you have children. So why am I bringing that up? I just thought it was cool to bring up because you talked about having children and
like
having
in Asia,
that
there's another country that gives you an incentive to work kids. Is it Japan? I forgot.
Oh, yeah. I don't know. Okay, so why don't
they need more population in their country so that you? Oh,
so you get paid to have. Oh, wow. Okay, so I'm in the wrong country. Okay, reel it back. Come on back home. Okay.
I don't know about the incentives. I'm not sure about that. I don't know.
Yeah, it was cool because like you get deduction from the hospital stay over there, and then they actually like send a nanny in to help you like the first few weeks, and it's a really cool concept. I guess to encourage childbirth. I don't know. Okay, so we talked about the deduction with childcare. What else can you think of, Bianca? Does owning a home really help you with tax deductions? I get mixed answers with that. Like I have a lot of entrepreneurs who are like, you know what? Rent, because a home is a tax drain. It's like it's a revenue. It drains your money. You know, you have all these bills. You have electricity. You have taxes, you have the mortgage, you have the mortgage tax, all of these things. How can we be smart about, as homeowners, about filing our taxes, especially when we have a family?
Yeah. So when you already decided to buy a house and use it as a deduction, I mean, if you buy a house, you buy it for different reasons, not just for tax benefits. Because you have a big family, you want to, can't live in a 2-bedroom apartment. Now you need a home. So the tax benefits of owning a house is all the interest you pay is a tax deduction. So instead of taking the standard deduction, you get to itemize your deductions. And let's say the standard deduction this year is $12,600.
Okay.
And you paid an interest $17,000. So you get to deduct $17,000 instead of taking the standard deduction, because you're itemizing your deductions. And then when you're using the long form, that everybody knows the long form, then you get to deduct more stuff like medical expenses, working from home, your job expenses if they apply. So that's the tax benefit of
itemizing. That's what you recommend.
And when you have a house, you get to itemize, because, and not necessarily when you have a house, because if your itemized deductions are higher than your standard deduction, then you get to itemize. And usually a home always puts you at a higher itemized deduction because of the interest you're paying on the house, and plus you get to deduct this other taxes, repairs. If you do any other energy efficient credits, you can deduct that too.
Like the solar,
right?
Energy efficient.
Correct.
Okay, so just being smart about how to utilize the home, being a homeowner, as in itemizing what the tax deductions could be.
You're correct.
Okay.
Correct.
And so basically keeping track of all those things, just have good records.
To have the records, have the receipts. Every deduction you're going to take, you need a receipt.
Oh.
Because if during an audit, you need to have the proof.
Okay.
Correct.
Well, then, you mentioned the home, the working from home or the small business owner. Bianca, tell me about gas mileage. Does it really make a difference? Because sometimes, like when I'm driving to a meeting, I'm like, I should really be logging these miles right now for taxes. And I'll start the new year and I'll do it for the first 2 months. But then by the time July hits, I haven't logged the miles. Is that something that we really should consider as a small business owner? Like, did you log your miles here today?
Me?
Yeah.
No, I don't.
You don't?
Well, I don't, because I have an office. So I go there and it's 10 minutes. So but if I need to go see a client, and because we charge per hour bookkeeping services, and then we charge our traveling time. So do I need to log the miles? It depends on what type of service you're offering, what type of business you have.
Oh, really? So it's not just like, even if you have an office and say you go to your Toastmasters meeting every Wednesday, which is 12 miles away. Should you log those hours? Does it matter? I mean, not hours, miles.
Well, the business miles are when you're from going from work, per se. You're going from home to your office as a regular job. That's commuting. That's not deductions. When you if your employer sends you from work to another location to work, then you get to deduct the miles. But most employers pay you they give you mileage reimbursement. So, but if you're as a self-employed, you're logging your miles. Yes. If you have to go to a meeting, if you have to go to meet the client, and if you have to go to all of that, those are business expenses. So you can either, as far as miles, you can either take the mileage deduction, or you can the actual expenses. So gas, receipts, and that. So either or.
Okay. I like that. Well, let's see, Bianca, I wanted to ask you one more thing, but first I wanted to take a quick break. And then when we come back, we're going to wrap up. And I wanted to know what advice you would give to someone who hasn't filed taxes in 3 years. Like, where do they even start? Because sometimes the years add up and it's like, should I even care anymore? I don't even care anymore. Okay, so that's when we come back. You're listening to AM 1220 KHTS. We're on Family Planet 365. I'm your host, Malena Jackson, and I'll be right back. Hello and welcome back. You're listening to Family Planet 365 on AM 1220 KHTS. Today's show is brought to you by the Nanny Factory, and I am happy to be your host today. I'm Malena Jackson, and my guest is Bianca from Tax Smart Solutions. And of course, we're talking about taxes. If you're just tuning in, Bianca is going to give us one last piece of advice to someone who hasn't filed taxes in years. Should they just forget about it, Bianca?
I don't think they should.
Okay, what advice would you give the person?
IRS might not forget about it. first I would like to know what was their income for that year, because if you're not required to file a tax return, then you're fine. If you are required to file a tax return and you're just ignoring it, then don't be surprised if the IRS is going to want you to file taxes at some point in time. Or if you have a balance due, they're going to send you a letter for you to pay late filing fees plus interest and penalties. So what you could do is contact a professional, make sure you ask for transcripts, or we can actually order transcripts from the IRS just to make sure that your income is, if you're required to file or not, and then we'll determine from there how to proceed and help you.
Okay. I like that. So there is light at the end of the tunnel.
There is.
Well, thank you, Bianca, for being here. I've learned a lot. Tell us how we can be in touch with you.
You can find us on our website,
Okay.
www.taxmart.solutions.
Oh, .solutions.
.solutions.
Okay.
Yes. You can send us an email at info@taxmart.solutions, or simply call our 800 number, 866-398-3308. And follow us on social media, Instagram, Twitter, and Facebook. And we usually post tips, advice,
Okay.
and you can be in contact with us. And it's pretty. We have pretty good, informative social media.
I like
channels.
that. Yeah, it takes the pressure off of accounting and numbers. It's fun. I like the way you give the tips on your Facebook page. It's really nice.
Yeah. And don't worry, we you guys live it for last minute. We prepare as tax preparers the entire year after summer so that we're ready for the season. So if you make sure you have a professional doing your taxes, and you're in good hands.
All right. Well, thank you, Bianca from
Thank
Tax
you.
Smart Solutions. That's our show for this week. I am so glad that you were here with us. Be sure to join next Friday when we'll discuss finding the preschool that's right for you and how to help your little one deal with separation anxiety. I'm so glad that you were here today. I can't wait until we meet again. I'm your host, Malena Jackson. Bye for now.